Welcome back to the channel. Today's topic is one of the most important concepts in price action trading, market structure. If you don't understand market structure, you're trading without knowing the direction of the market. Before you look for entries, candlestick patterns or support and resistance, you must first understand whether the market is trading up, trading down or moving sideways. In this video, we'll start with the theory first, then learn how to identify market structure, understand higher highs and lower lows, recognize trend reversal and avoid common mistakes. By the end of this video, you will know how to read the market like a professional trader. What we're going to discuss today: what is market structure, why market structure is important, uptrend, downtrend, range, higher high, higher lows, lower highs, lower lows, break of structure, change of character, how to identify market structure, common mistakes, and final tips. What is market structure? Market structure is simply the way price moves over time. It tells us whether buyers or sellers are in control of the market. Every market moves in one of the three ways: uptrends, downtrends, sideways. Understanding market structure helps traders identify the overall direction before looking for trading opportunities. Why is market structure important? Market structure helps you trade with the trend, avoid trading against strong momentum, identify high probability entry zones, improve your risk management, understand when a trend is ending. Professional traders don't just buy or sell randomly. They first identify the market structure. Uptrend. An uptrend is a market moving upwards over time. An uptrend forms when price creates higher high, higher lows. What is a higher high? A high high is when price makes a new high above the previous highs. This tells us buyers are strong enough to push price higher. What is a higher low? A higher low is when price breaks back but stays above the previous low before continuing higher. This shows buyers are defending higher high price. What does an uptrend tell us? Buyers are in control. During an uptrend, traders generally look for buying opportunities rather than selling. Downtrend. A downtrend is a market moving lower over time. A downtrend forms when the price creates lower highs, lower lows. What is a lower high? A lower high is when price retraces upwards but fails to break the previous high. What is a lower low? A lower low is when price falls below the previous low. What does a downtrend tell us? Sellers are in control. During a downtrend, traders generally look for selling opportunities rather than buying. Sideways market. Sometimes the market isn't trending. Instead, price moves between support and resistance. This is called a ranging market. In a ranging, buyers defend support, sellers defend resistance. Price moves sideways. Many beginners lose money by trading a ranging market like a trending market. Break of structure. A break of structure happens when price breaks an important swing highs or swing low in the direction of a trend. Bullish break of structure. Price break above the previous higher high. This confirms buyers remain in control. Bearish break of structure. Price breaks below the previous lower low. This confirms sellers remain in control. A break of structure usually signals trend continuation. Change of character. A change of character is often the first warning that the current trend may be ending. Example: imagine the market has been making higher highs and higher lows. If price suddenly breaks below the most recent higher low, it may be a sign that buyers are losing control. Likewise, if a downtrend breaks above a lower high, sellers may be losing control. Change of character. A change of character doesn't guarantee a reversal, but it tells traders to pay attention. How to identify a market structure? Follow these simple steps. Step 1. Start on a higher time frame such as the monthly or weekly chart. Step 2. Mark the obvious swing highs and swing lows. Step 3. Ask yourself, are higher highs and higher lows forming? Are higher lows and lower lows forming, or is it price moving sideways? Step 4. Wait for confirmation before entering a trade. Don't assume the trend has changed just because one candle moves against it. Common mistakes. Mistake 1. Right now we got British yen on a daily time frame. As you can see, we have an uptrend. It is making higher high, higher low, higher high, higher low. So we're going to identify it, and this is how you identify an uptrend. We have a higher high, higher low, higher high, higher low, higher high, higher low. So you're basically going to be taking your trades in between these levels. You're going to be taking your buys here, targeting this. Then you take your buy here, and then you target this. You also take your buy here, then you're going to target here. Let me put another zone here. So also for the downtrend, you're going to be identifying a downtrend. Also here it's a similar thing. Nothing is different. It's just the only difference is that the market is going to be going on a downtrend, making instead of making higher highs, it's going to be making lower lows, lower high, lower low, lower high, lower low. So basically you're going to be identifying it the similar way. Nothing is different. So we don't really want to make the video long, so I'm only going to do the uptrend one on the market. Ignoring the higher time frame, always identify bigger trends first. Mistake 2, forcing trades against the trend. Trading with the trend usually offer high probability setups. Mistake 3, confusing small pullbacks with trend reversal. A pullback is normal during a trend. Wait for confirmation before assuming the trend has changed. Mistake 4, ignoring support and resistance. Market structure becomes much more powerful when combined with the key support and resistance zone. If you're following a top-down analysis approach like I do, begin with the monthly time frame to determine the overall market direction. Next, move to the weekly time frame to identify the market structure. Look for a clear sequence of higher high and higher low in an uptrend, or a lower high and lower low in a downtrend. Finally, use the H4 time frame for your entry. Wait for a break and retest, a change of trend on the H4, and a strong candlestick confirmation before taking a trade. Following this process may help you trade in the direction of the higher time frame and focus on the high quality setup. Market structure is the foundation of price action trading. Once you master how to identify trends, pullbacks, and reversal, you will make more informed trading decisions and avoid many common mistakes. If you found this video helpful, don't forget to like, subscribe, and turn on your notification. Comment below, let me know, do you use market structure before entering a trade? Thanks for watching, and I'll see you in the next video.